Hi, Tom Lydon here in San Diego at the Schwab IMPACT Conference here with Greg Valliere, Chief U.S. Policy Strategist at AGF Investments. Greg, great seeing you.
Great to see you, Tom.
An exciting year, a lot going on. You must be busy.
Rather, constantly busy. I've never seen anything like this in my entire career. Every day there's 2 or 3 news stories, Trump and the taxes, Trump and the porn star, you name it. Every day there's a big story.
Just another couple of tweets and that makes you even that busier, doesn't it?
Yeah, but you know, there's a serious point I'd make, and that is with all the tweets, all the dysfunction, all the scandals, it hasn't affected the markets. And that's, I think, really crucial.
Yeah. So when you think about that and you think about the average investor today, here we are still touching new highs, and investor confidence is still strong. Majority of investors, however, feel that we will see some negative impact down the road, maybe a recession headwind or something like that. When you do the political overlay, what's the average investor to do?
Well, first of all, the anxiety among many investors, in my opinion, is bullish when you have that kind of a mentality. But more importantly, I think investors have to tune out a lot of the BS and the dysfunction in Washington. It's background noise.
Yeah.
All of the stuff, will there be impeachment? Yes, Trump will get impeached. He'll get acquitted by the Senate. But that doesn't affect earnings. It doesn't affect the Fed. It doesn't affect the overall economy. I think for investors, the fundamentals still look pretty good.
Yeah, and when you look at the fundamentals in the marketplace, again, unemployment's low.
Yeah.
Where the Fed keeps dropping rates. Compared to economies around the world, we're in pretty good shape.
Absolutely. And I'd add one other factor. We all know about the Fed being very accommodative. Fiscal policy is incredibly stimulative. By that I mean spending, tax cuts. We're still having the impact on the business tax cuts, which are positive. We're going to run a deficit of over $1 trillion with a fairly strong economy. In the long run, I'd worry about that in terms of debt servicing costs. In the short run, spending this much money, having fiscal policy this stimulative, is still another reason why I don't see a recession.
So as we go into next year, first of all, is Trump going to get reelected? Yeah. And if not, who's going to be in the seat?
Well, Trump has some problems, obviously. I do think he will get acquitted by the Senate, but he has a lot of groups, young people, minorities, who don't like him. So I think it's going to be a close race. What he has to be very thankful for is a weak field of Democrats. Is it a Joe Biden who's maybe lost a step, or is it Elizabeth Warren who's very polarizing? Those look like the only 2 likely nominees right now, and I think Trump would have to be considered, at least today, as the narrow favorite.
Okay, so if that's the case, and we're sitting here a year from now, and Trump is reelected, what does that mean for the markets and the average investor?
I think for the markets and investors, it's not a bad story. I think that we'll still have a stimulative monetary and fiscal policies. He'll get a continuation of low regulations. I think that's not a bad story for the markets. Although you get Trump fatigue after a while with all the tweets and all of the dysfunction, but I think the markets would happily live with him. I think the markets could live with Joe Biden as well. Elizabeth Warren is another story.
Yeah. And with all that going on, all that noise, is the average investor tuning it out?
Yes, I think investors increasingly are, and they say, as I mentioned, they say they're looking at the Fed, interest rates. They're looking at a tremendous labor market, low inflation. I think the fundamentals continue to be surprisingly good.
Yeah. Greg, that's wonderfully optimistic, and you provided some great clarity. Look forward to catching up with you next year.
Likewise.
Thank you.
Okay.